Welcome back to Markets Today. We're discussing the global and local market volatility across different asset classes. And we're seated with Kevin Nganga, who is the CEO of Scope Markets. Kevin is giving us insights onto how he made money this week, how he can make money. But I'm more interested, Kevin, how have you been sleeping, if at all?
It's actually been a very tough week. I haven't seen this kind of action since 2008. So I remember I was a match in October 2008, and we were not sleeping because you see most of the action happens during the US time. So 8, 9 p.m., 10 p.m. you're still in the office trying to make sure that clients are getting proper execution. But I think it always has to happen. Every 10 years, you need
something has to happen.
Yeah.
Okay. Yeah. All right. Now, I'm a client. Perhaps now I'm saying I'm creating a scenario.
Yes.
I open an account with Scope Markets, and I have access. I can get access to gold. I can get access to
commodities,
indices, to forex as well. Actually, we didn't discuss forex. Maybe you can give us a highlight. What was the best trade this week? What was the best pair?
That's a hard question.
Okay.
Because the obvious play a lot was safe haven. So go long Japanese yen. I go Japanese yen against maybe a commodity currency like the Canadian dollar. I think that was a smart trade. I also think the majors, the G10 currencies, very volatile. So you want to look at where the Swiss franc is. So I would say safe haven currencies was probably Japanese yen, probably the Swiss years.
All right. So now I come back to the question. I've opened up and I possibly have an account on Scope Markets, and I have access to these 4 different asset classes, even above equities and bonds in Nairobi, which you don't offer.
Yes.
Then what do I do next if I'm on your platform and I want to?
Okay.
You're saying this volatility has just started.
Yes.
What do I do next?
So a couple of things depending on your experience. If you, let's take first scenario, let's say your experience, such as your experience in the market, the first thing that you want to do is understand what are your parameters for risk. What are you comfortable taking risk on? Okay, so you've put in, say, $1,000 for argument's sake, and you're saying, okay, I'm comfortable with 10% risk parameter. You want to look at low volatility asset classes because 10% is what would call sort of low volatility. So you want to say, okay, what's sort of predictable in that space? And you want to say indices. So you want to understand what are the underlying, because right now technicals and sentiment are very critical. That's number one. Number two, you want to be very clear about data and the news outlets, because what you now have is what you can have is a systemic risk event. Okay. You can have an announcement of a global shutdown. You can have an announcement of airline company or airspaces being shut down. What does that have an impact? So for me, what I would do is sit and understand what are the risk parameters, number one. Number two, look at what is the global expectation. Then identify, depending on your risk appetite, there are certain asset classes that would address that. So that's what I would do.
All right. Yeah. Okay, so then I would have to take the responsibility of trading for myself.
Yes.
And understanding. And the only thing I'm getting on Scope Markets, it's just the platform and access.
And access, and then of course you will have a relationship manager who would continuously give you engagement on touch points. What's happening in the markets? What should you look out for? What's the economic calendar looking out like this week? What are the expectations? Are any central banks meeting? Okay. Are there any interest rate decisions you need to be cognizant of? Those are very critical points to that. And that's what our relationship managers will provide you on an active basis.
On an active basis.
Yes.
And also walking around earlier in your offices, we did see a couple of training rooms. What are these for?
So what we've done is, because of the volatility of the markets, our Scope Markets, we've taken a step back and said, hey, how do we help our clients understand volatility and how to protect their positions? So what we've done is we conduct continuous training courses on how to navigate this volatile, because it's unprecedented. Okay. So we don't expect everybody to know how to do that. So what we do is we have these sessions in the training rooms where we talk to people and say, okay, this is how to manage risk. this is how to position size your trades and that sort of thing. So we are very committed to ensuring that customers have longevity in their trades.
All right, so if I'm new to this, or if I'm new at least to this asset classes, the first thing is open this account and then sign up for the teaching.
The teachings, the educational platform, yes, and their webinars as well. Begin to understand the markets and how to take advantage of the opportunities.
Okay.
Yeah.
Kevin, do I need a minimum amount to be able to be part of your network?
Yes, so it's not a hard fixed that, but we encourage people not to put less than $100 or 10,000 shillings. We now have a Kenya shilling trading account where you can be able to see your global trades being valued in Kenya shillings, so you don't have to carry the additional exchange risk that you would see or traditionally. So we typically encourage clients to deposit between 10,000 shillings and 25,000 shillings as an entry point.
Okay.
Yeah.
And then once I deposit, if I trade, how do you make money? What are the rates that
So we carry all transactional costs. So what we offer you is what you call purity of return. So if you make 1,000 shillings on the trade and you want to withdraw that money through mobile money or to bank, you get that money. So we carry all the mobile charges for you, and you get what we call purity. So if you deposit 10,000 shillings and actively enter, say, the oil market and you make money, you can access your funds real time. If the amount of money is below the M-Pesa limit, you can be able to withdraw directly and you get your money within 10 seconds.
Okay, so it's actually interlinked with M-Pesa. I can upload an M-Pesa,
yes, you
and I can
deposit
also
directly real time on M-Pesa, do the trades, and exit on M-Pesa real time.
Okay.
If the amount of cost is above the threshold, you'll be able to deposit the money via PesaLink or a real time gross settlement, or alternatively deposit via your credit card or your debit card, and then make withdrawals to your bank. And typically it takes 24 hours to get your money.
get your money.
Yes.
Okay. And then if I want to access your media presence,
Yes.
where will I get this platform? Is it website, or am I downloading an app?
So if you want to sign up, you'd visit our website, which is copemarkets.co.ke. Just register, which is just name, email, address, and then just put in a password. Then we'll get our sales support team to contact you. They will take you through the onboarding process, where we just typically look at a proof of address and a proof of ID. You should be able to be ready to trade in less than 10 minutes.
Okay.
Yeah.
And then that means that I have to go through an onboarding process to be verified before I can trade.
Correct.
So I can't just open it and start an account. I have to.
We have to go through a KYC process to ensure that source of your money is legit and that sort of thing, and we do some background checks as well.
How do you do your I'm curious. That's just a really offline process. Like if I told you I sell potatoes,
so we have access to global databases on sanction lists and that. So we do make queries on that to see whether there is a hit or any information, and then do an analysis of that.
All right. Then as we come into the tail end of this segment, if you're speaking to a broad range of investors, because today when you look at Kenya, people have invested in the Nairobi Securities Exchange, lost money, lost interest.
Yep.
People are now looking at alternative products. Emma Kiba has come.
Yep.
The government of Kenya is now offering bonds on the phone.
Yep.
We're seeing a lot of conmen. We've seen a lot of people lose money to real estate projects.
Yes.
And the greenhouse concept, a
Correct.
lot of money.
Correct.
How do you talk to these people in terms of, is this product, who is it right for, and who should actually be part of this, so that you're not getting people saying, Kevin told us, put our money here and we lost it?
I think a couple of things. Number one, what I always encourage people is to understand what is their risk appetite. That's number one. Number two, to understand how do I develop a portfolio of different assets. So you may have some property somewhere. You may have a plot that you bought in Kitengela. It's very important for you to review your own portfolio. Investing is a personal decision.
Yes.
And when we speak to a broad range of investors, we ask, even before you're onboarded, why is your interest? What is it you want to achieve? Do you want to achieve residual income? Do you want to have a full-time trading experience? Because we would want to tailor-make something that is responsible, number one. Number two, that appreciates what your risk levels are. Okay. So what we do is we encourage people to first have a personal reflection as to, okay, so I have money in a fixed deposit, it's probably earning me 6%. I have some money in a money market fund, and 8%. I probably have some exposure in the Nairobi Securities Exchange, where maybe I'm not able to short when there's market sell-off, and I have some sort of loss. So you ask yourself, okay, where are these foreign investors who are exiting the NSE going to? They must be going to global markets. Now we do have opportunity to get into global markets. So we are asking for diversification. So that's what we speak to them about and say, hey, this is an alternative asset class. Think about it. That's how we communicate.
Okay,
yes.
So I like that you've just brought out the stratosphere. So your fixed income has to be there.
Yes.
Your money market.
Money markets, you have cash, you have local equities, and then now start building a global portfolio.
So that's a relatively mature investor. It's
not actually not necessarily mature. Yes. It's just that it's where are you
are
at your different point. Okay. We have a lot of customers who are off campus. They have got financial knowledge. They've done financial courses. Okay. They do have the knowledge, and they're saying, okay, how do I start building this portfolio? Fantastic. Forex could be one. Okay. Global shares could be another. So what we do is tell them, okay, why don't you start with something small? We will walk you through the journey. Okay. We have mentorship programs. So what we do is just identify where you are from a career perspective, or where we are from an economic perspective as well.
Okay. Yeah. Then two last questions, Kevin.
Yeah.
For the last, I don't know if 1 year is a good reference point or 6 months, for the accounts that are on your platform, yeah, would you give us a sense of what, say, the average return has been?
Okay, that's a bit of a hard question to answer because we have very diverse. We have institutional clients who are on our platform. We have high net worth. We have active day traders. We have people who trade only in events like coronavirus or that. So it would be hard to say what the average return is, but we've seen people do maybe 6-7% returns. We've seen people who have aggressive returns of maybe 10-15%. So it's typically, I would say, maybe over the last 2 months. Yeah, so if you were to annualize it, it's probably going to be about maybe 24-25%.
Okay.
Yeah.
So it really just depends.
It really depends on the different client segments that we have. Yeah.
All right. So we've come to the end of this, and we certainly appreciate
Thank you for your time. I really appreciate it.
I wish you might as well mentor me.
Yeah. No, you have, I mean...
very knowledgeable. Yes. I need to make some money, but that aside, Kevin, now tell us what to expect in markets, and maybe just finish us off with a parting shot to the audience as well.
So I think, for me, what is critical is how does this all dovetail into the local markets? We have a lot of imports that we do from China. We have a lot of imports that we do from Europe. One of the things that people need to start thinking about is how long do you see until the pinch starts? Because, yes, imports were happening, but now you're having a longer lead time for importation. You're having a longer lead time for inspection. So I think we need to ask ourselves is, how are you prepared for any downturn economically? Okay. That's from a business perspective. Well, I've read articles that people are saying, yes, now we need to benefit from low oil prices. We have to also understand the impact of low demand as well.
Exactly.
Yeah, so I think as a parting shot is, as businesses, we all need to look at it critically. You need to look at your demand and your markets. Where are your critical markets? How can you service your critical markets in these unusual trading conditions and unusual economic conditions?
So would that mean that businesses need to hedge, and is that a conversation that you have with you?
I think businesses need to have contingency plans. Okay. You need to start having, maybe with your senior management, what are the contingency plans if there's an economic downturn, if access to product is constrained. Just start building cases of what is your response, or what are your tactics that you're going to do that. I think it's very critical for businesses to do that. And it's at all levels, SME all the way to large corporates.
Okay, yeah. Fantastic. Thank you so much, Kevin,
for
your time. Yes. Let's see how else we can be able to make money.
Thank you for your time as well.
All right. Great. Ladies and gentlemen, cash is king. But if you have an appetite for taking risk and putting your feet in the game and trying to see what's happening, then Scope Markets offers you a platform to be able to access assets asset classes such as gold. You can access global indices, global stocks, and global currencies, and just be able to see what is out there outside of investing in Kenya. And I guess this is something very interesting because you have to be able to look at alternative assets. You have to get over your geographical biases, and perhaps this time of volatility would be a good time to engage with this company. If nothing else, learn from them through their training sessions and see what can be done. Thank you for joining us today, and see you next time. Good afternoon.